There's a moment that separates two versions of your financial life. It happens when you open your banking app and your shoulders don't tense, when the numbers on the screen don't trigger that familiar knot in your stomach, when you can look at your balance and think about possibility instead of survival. Most people never experience this moment. They spend decades in a state of low-grade financial anxiety, constantly calculating whether they can afford the coffee they're already holding, whether buying actual groceries means living on toast for a week, whether that unexpected expense will cascade into a full-blown crisis. I'm Mike T, and I've spent years studying the invisible mechanics of wealth building, not the fantasy version sold in seminars, but the real psychological and mathematical forces that separate people who build lasting financial security from those who stay trapped in the same patterns their entire lives. The conventional wisdom about wealth is almost entirely wrong. Financial advisors will tell you that you need $1 million to feel wealthy. Self-help gurus preach that 6 figures is the magic threshold. Business influencers talk about 7-figure exits and generational fortunes. They're all missing the point. There's a much smaller number that fundamentally transforms your relationship with money, and once you cross it, the entire game changes. That number is $20,000. Not $100,000, not $500,000, $20,000. This isn't arbitrary. It's the first major financial threshold that creates an actual behavioral shift. The point where your brain stops operating in emergency mode and starts thinking strategically about growth. Think of wealth building like pushing a massive boulder up a steep incline. In the beginning, you're straining against gravity with everything you have. Your muscles burn. Progress feels invisible. Every step requires maximum effort, and the smallest distraction sends you sliding backward. Most people spend years in this phase, wondering if financial security is even possible. They make progress, then something breaks. They save money, then an emergency wipes it out. The boulder keeps rolling back down. But there's an inflection point, a crest in the hill where the physics reverse. Once you push past it, gravity stops fighting you. The boulder begins moving on its own. What felt impossible suddenly feels inevitable. $20,000 is that crest. Everything before this threshold feels like you're pushing uphill against enormous resistance. Everything after feels like momentum working in your favor. The difference isn't just mathematical, though the math matters. It's neurological. When you don't have money saved, your brain operates in what psychologists call scarcity mode. Every financial decision gets filtered through fear. You accept the first job offer, even if it's terrible, because you can't risk being selective. You stay in situations that damage you because leaving feels too dangerous. You say yes to things you resent because you need the income. This isn't weakness, it's biology. When your survival feels threatened, your brain literally cannot think about growth and opportunity. It's like trying to plan a vacation while your house is burning down. Your mental bandwidth gets consumed by immediate threats. But something remarkable happens when you cross the $20,000 threshold. Your brain gets space to think differently. Instead of asking, how do I survive until Friday, you start asking, how can I grow this? Instead of reacting to whatever crisis appears, you become proactive about building wealth. Research from Vanguard demonstrates this shift quantitatively. Having just $2,000 in emergency savings increases financial well-being by 21%. $2,000, less than most people spend on a vacation, but that small buffer moves you out of pure panic mode. When you push that cushion to 3 to 6 months of living expenses, which for most people lands around $20,000, you get another 13% boost in financial well-being. More importantly, you've created enough breathing room for your brain to shift from wealth preservation to wealth creation. That's when the real acceleration begins. Let's say you're saving $1,000 every month and earning 8% return on your investments. Getting to your first $20,000 takes about 19 months of consistent saving and investing. That's a 1.5 years of discipline, sacrifice, and delayed gratification. It's not easy. Most people quit somewhere in the middle. But here's where it gets interesting. Your second $20,000 doesn't take another 19 months. It only takes about 17 months. You did the exact same work, saved the same amount, took the same risks, but you shaved 2 full months off the timeline just because you had more money working alongside you. That's compound interest starting to kick in. By the time you're going for your third $20,000, the timeline shrinks further. Your money is doing an increasing share of the heavy lifting while you're putting in the same effort. And when you reach the really big numbers, the acceleration becomes almost absurd. Once you hit $400,000 in your investment portfolio, you can generate your next $20,000 in just 5 months. The same amount it took you nearly 2 years to accumulate initially is now happening automatically through your investments. That first milestone feels impossible. Every milestone after gets progressively easier. You might think wealthy people have access to some secret investment universe that regular people can't touch, exclusive hedge funds, special opportunities that only unlock at certain wealth levels. And while there is some truth to that at the ultra high end, it's not what's driving this $20,000 phenomenon. The real secret is simpler: basic mathematics working in your favor. When you invest $1,000 and it grows 10% in a year, you make $100. Take that exact same 10% growth rate and apply it to $10,000, and suddenly you're looking at $1,000 in profit. Same investment, same time frame, same level of risk. This is why hitting $20,000 feels like a turning point. Until that point, your investment returns feel almost insignificant because you're working with smaller amounts. A 10% return on $2,000 is $200. Nice, but not life-changing. But a 10% return on $20,000 is $2,000. Now we're talking about money that actually matters. When you've got $20,000 sitting in investments earning 8% annually, that's $1,600 flowing into your account over the course of a year without you lifting a finger. Money you didn't have to earn through your job. Money that showed up because your existing money was working on your behalf. The investment strategy isn't any more sophisticated than someone with $1,000 can use. You can buy the exact same index funds, use the same brokerages, follow the same basic principles. The only difference is scale, and that scale transforms small percentage wins into real financial progress. But here's what most people completely miss, and it might be the most important point in this entire piece. When you save $20,000, you've actually accomplished something far more valuable than accumulating money in a bank account. You've fundamentally rewired your brain and built the most important financial habit you'll ever develop. Think about what it actually takes to save $20,000 from zero. Unless you're making absurd money or living rent-free, this requires serious discipline. You had to track where every dollar was going. You had to say no to things you wanted so you could set money aside instead. You had to resist the urge to blow your savings on whatever shiny object caught your attention that week. Most importantly, you had to do all of this consistently for months or even years. And here's what that means. You proved to yourself that you can control your money instead of letting it control you. You became the type of person who can delay gratification when it matters. That's not just a financial skill. That's a life skill. This identity shift affects every financial decision you make going forward. Before you had $20,000 saved, buying a $4 coffee might have required mental gymnastics about whether you could afford it. After you hit $20,000, you're not sweating the small stuff anymore because you know you have your priorities straight. You've proven you can make the big sacrifices when necessary. But there's another psychological shift that happens at this level that rarely gets discussed. You start seeing opportunities instead of just threats. When you're living paycheck to paycheck, every unexpected expense feels like a disaster. Your car needs repairs, your laptop dies, your rent goes up. These aren't opportunities, they're financial emergencies that derail your entire month. But when you have $20,000 in the bank, these same events become minor inconveniences at worst. Your car needs repairs? Annoying, but not catastrophic. Your laptop dies? Time to upgrade to something better. Your rent goes up? Maybe it's time to finally look for a better place or negotiate your salary. Even better, you start noticing opportunities that were always there, but you couldn't take advantage of before. Your friend mentions they're starting a business and looking for investors. Before, you would have thought, that sounds interesting, and moved on. Now you can actually consider whether it's worth allocating $5,000. A killer deal pops up on a rental property that needs work. Before, you would have scrolled past it and felt envious. Now you can run the numbers and see if it makes sense as an investment. Your boss mentions a conference in another city that could accelerate your career, but the company won't cover it. Before, you would have made excuses. Now you can weigh the potential return on investment. This is what wealthy people mean when they say money goes to money. It's not some cosmic conspiracy where the universe rewards people who already have cash. It's that having money gives you options, and options create more opportunities to make money. Here's something else that happens around the 20,000 mark that will make you question everything you thought you knew about budgeting. You start caring less about small expenses and more about big ones. I know that sounds backwards, but stay with me. When you're broke, you obsess over every purchase. Should I buy the name brand cereal or the generic version? Is it worth spending $3 on coffee when I could make it at home? Should I get premium gas or regular? These decisions consume mental energy because every dollar feels precious. But when you have a solid financial foundation, you realize these micro decisions are largely irrelevant. The difference between spending $3 on coffee versus making it at home is maybe $1,000 per year if you're really going overboard. That's not nothing, but it's not going to make or break your financial future either. What matters are the big decisions. Where you live, what you drive, how much you save, where you invest. These choices can swing your net worth by tens of thousands of dollars over time. So instead of agonizing over whether to buy organic bananas, you focus your energy on optimizing your housing costs, maximizing your income, and making sure your investment strategy is solid. This shift in focus is incredibly liberating because it frees up mental bandwidth for the decisions that actually matter. You stop sweating the small stuff and start thinking strategically about wealth building. Now let's talk about what happens to your career once you hit this milestone, because this is where things get really interesting. Having $20,000 saved doesn't just change your relationship with money, it changes your relationship with work. When you're living paycheck to paycheck, you're essentially trapped in whatever job you currently have. Your boss could be terrible, your coworkers could be toxic, the work could be mind-numbing, but you can't leave because you need that next paycheck to survive. This puts you in an incredibly weak negotiating position. You can't ask for a raise because you're afraid they might fire you. You can't push back on unreasonable demands because you need the job more than they need you. You can't explore other opportunities because taking time off for interviews feels too risky. You're stuck, and everyone knows it. But $20,000 changes the entire dynamic. Suddenly, you have what I call walking away money. You could quit tomorrow and survive for months while you find something better. This doesn't mean you should be reckless or burn bridges unnecessarily, but it means you're negotiating from a position of strength instead of desperation. This psychological shift affects everything about how you approach your career. You start asking for the raise you deserve, because the worst they can say is no, and you'll be fine either way. You push back on unreasonable requests because you're not afraid of the consequences. You explore new opportunities because you can afford to take some risks. Here's what's really crazy. Often you don't even need to use your walking away money. Just having it changes your entire demeanor at work. You become more confident, more assertive, more willing to take on challenging projects. And guess what happens when you show up differently? People notice. Suddenly, you're getting better assignments, more recognition, and yes, more money. It's like having a secret superpower that you hope you never have to use, but knowing it's there changes everything about how you operate. And the best part? The more confident and successful you become at work, the faster you build wealth, which gives you even more options and confidence. It's a positive feedback loop that accelerates over time. But here's where most people mess this up, and I see it constantly. They hit $20,000, feel that psychological shift, and then immediately blow it on something stupid. Maybe they decide they deserve a new car since they've been so disciplined, or they take an expensive vacation because they've earned it, or they use it as a down payment on a house they can't really afford. Don't do this. That $20,000 is not a reward for good behavior. It's the foundation of your entire financial future. It's the seed that grows into generational wealth if you're patient enough to let it compound. Here's something that will probably make you laugh or cry depending on your current situation. The average person spends more money on their car over their lifetime than it would take to achieve complete financial independence. Think about that for a second. Between car payments, insurance, maintenance, and gas, most people are dropping $600 to $800 every single month on transportation. Over a 40-year period, that's easily $400,000 to $500,000 just to get from point A to point B. Meanwhile, they're complaining that they can't afford to save for retirement. Here's what makes this even more ridiculous. The moment you drive a new car off the lot, it loses about 20% of its value. So you're not just spending money, you're actively destroying wealth. Compare that to investing the same amount in a diversified portfolio. Instead of watching your money evaporate, you're watching it multiply. But I get it. Cars are emotional purchases. You want something reliable, something that looks good, something that makes you feel successful. And there's nothing wrong with that, as long as you understand what you're trading off. That car payment might make you feel wealthy, but it's actually keeping you poor. This is where having $20,000 saved completely changes your perspective on major purchases. Instead of thinking, can I afford the monthly payment, you start thinking, what is this really costing me in terms of opportunity? That $30,000 car isn't just $30,000. It's $30,000 that could have grown to over $200,000 in your investment account over 20 years. Suddenly, driving a reliable used car doesn't feel like a sacrifice anymore. It feels like a strategic choice that's funding your future freedom. And here's the beautiful irony. The person driving the flashy new car is probably stressed about money, while the person driving the older Honda is quietly building wealth and sleeping better at night. This mindset shift extends to every major financial decision you make. Housing, education, vacations, hobbies. Everything gets filtered through the lens of opportunity cost, not in an obsessive way that sucks all the joy out of life, but in a strategic way that ensures you're making intentional choices about where your money goes. And let me tell you something that might surprise you. Once you start thinking this way, you often realize you don't actually want half the stuff you thought you wanted. That bigger apartment, the extra space would be nice, but is it worth delaying your financial independence by 5 years? That expensive hobby? It's fun, but there are probably cheaper ways to get the same satisfaction. It's not about becoming a penny-pinching miser who never enjoys anything. It's about becoming intentional with your money instead of letting it slip away on things that don't actually matter to you. When you have clear financial goals and understand the power of compound interest, it becomes much easier to distinguish between what you want and what you really want. So here we are, back at the beginning, back to that moment when you open your banking app. But now you understand what that moment actually represents. It's not just about having a certain number on a screen, it's about the psychological transformation that number creates. It's about moving from survival mode to growth mode, from reacting to life to designing it, from being controlled by money to controlling where money goes.
$20,000 isn't going to make you rich overnight, but it will fundamentally change how you think about money and opportunity. It's the difference between spending your life pushing that boulder uphill and finally reaching the point where momentum takes over. It's the difference between seeing every unexpected expense as a crisis and seeing unexpected opportunities as chances to build something larger. The person who can look at their bank account without flinching isn't necessarily wealthy in the traditional sense, but they've crossed the threshold that makes wealth possible. They've built the foundation that everything else grows from. They've proven to themselves that they can prioritize the future without sacrificing the present entirely. They've created space for their brain to think strategically instead of frantically. They've given themselves options, and options are the currency of freedom. That moment when you check your account and smile, that's not about the money itself. It's about what the money represents, proof that you're capable of building something that lasts. Start building that foundation today, because every dollar you set aside now is a vote for the version of yourself who gets to check their account without fear. Trust me, they'll thank you for it.